Welcome to the Duck Dive. Today we're tackling a pretty fascinating intersection. Global finance as we know it, the whole crypto world, and some, well, really out there ideas about where things are headed.
Yeah, one of you sent us a YouTube transcript, and our mission really is to pull out the most critical bits, those aha moments,
Exactly. Looking at economic instability, the future of finance, maybe even a fairer system down the line.
And what's interesting is how these seemingly separate areas, traditional finance, crypto, and these, let's call them unconventional theories, might actually be really tangled up,
Ah,
especially now.
right. So our main source today is a YouTube interview, the best interview, Clif High, with Jean Claude and Bix Weir from the Clif High Sci-Fi World channel.
And it really dives into current economic stuff, crypto, and even predictions from something called Webbit data.
Now, it's worth saying, for you listening, this interview presents some pretty alternative views and predictions. Our job isn't to say if it's right or wrong.
No, not at all.
Hmm.
It's more about understanding the ideas they're putting forward, what they're suggesting might happen.
Think of it like exploring a really complex puzzle. We'll touch on some surprising links they make, you know, financial wobbles, new tech, maybe even hidden forces.
And the goal is to break it down, make it clearer, without hopefully getting too bogged down in the weeds.
Okay, so let's dive in. The first big one, Evergrande, the default.
Right. And the speakers in this interview, they make a pretty bold claim right away. They say a bailout was possible
Possible, but didn't happen because...
because, according to them, it was a deliberate choice not to bail them out.
Wow, okay. That's significant. What's the reasoning there?
While they're looking at the potential fallout, the idea is this could be the first domino, leading to bond defaults, derivative defaults.
Which are those complex financial bets.
Exactly. And even impacting investments in things like Tether.
Tether, the stablecoin. So trouble in Chinese real estate could ripple all the way into crypto. That's quite a connection.
And they also touch on this idea that China might sort of protect its internal investors first.
While outside investors might take a hit, a haircut, as they sometimes call it.
Yeah. It highlights how interconnected things are, but also how consequences can differ depending on where you are.
And they don't stop there. They suggest this whole thing is actually bigger than the 2008 crisis.
Bigger and crucially signals maybe a lack of political will for those huge bailouts we saw back then. Like, maybe that era's over.
That's a dramatic shift in thinking. They also bring up systemic risk, right? This idea that everyone's invested in the same stuff.
Often with leverage, borrowed money.
Which amplifies everything, so if one big player stumbles...
It can cascade through the whole system because everyone's linked. One loss triggers another.
It really paints a picture of fragility.
And the solution they seem to point towards in the interview is pretty radical.
Yeah.
Basically, debt destruction, a clean slate.
A total reset. Okay, wow. Which leads us into this other really fascinating theory they talk about. The road to Ruda.
Ah, yes, the road to Ruda. This one's interesting.
It suggests there are, like, good actors working secretly inside the U.S. Federal Reserve and Treasury.
Yeah, supposedly working to dismantle what they call the banking cabal. It does sound a bit like a thriller plot.
And the sources they cite are unusual, Fed documents, but also comic books, wishes and rainbows.
And a road to rooted teacher's guide, apparently. Definitely not your typical economic analysis source material.
So what's the core story here? What are these good guys supposedly trying to do?
Well, a key element is the need to return to a gold standard, because our current fiat system isn't backed by anything physical.
Right, unlike gold.
And they argue that all the recent money printing isn't a mistake. It's actually a deliberate plan.
To destroy the old system, to make way for this gold-backed one.
That's the theory. It's framed as this big battle, good versus bad actors within the financial world.
And Alan Greenspan plays a role in this, the former Fed chair.
A central role. They portray him almost like a hidden controller, a financial programmer running the show from behind the curtain.
Like the Wizard of Oz. That analogy keeps coming up, doesn't it?
It does. Pulling levers, controlling the system in ways people don't see.
And they see the current situation, the money printing, claims of manipulated inflation figures, the CPI.
As the end game of this secret plan finally playing out.
It certainly makes you think about how we interpret economic data, doesn't it? Different narratives can emerge from the same numbers.
Absolutely. So let's stick with that Wizard of Oz idea for a second.
Okay. The fakery of the Emerald City, representing the current financial system.
As a kind of Ponzi scheme, yeah.
Yeah.
An illusion of stability that they think is fundamentally unsustainable.
And the ruby slippers, or rather the silver slippers from the original book.
They connect that to sound money. silver or gold being the real backing, the tangible value, holding up the illusion.
It's a potent metaphor.
And they hint, just cautiously, at some mainstream news stories, without going into detail.
Right, things that might suggest the old system, maybe built on shaky or even unethical ground, is starting to show cracks.
Yeah, that idea of internal weakness fits their broader theme of impending instability.
Okay, let's pivot slightly. The interview then talks a lot about counterparty risk.
Ah, yes. Crucial concept.
And why self-custody is so important. So counterparty risk is basically the danger that the other side of your deal, well, won't pay up, right?
Exactly. If you're dealing with a bank, especially one deemed too big to fail, or using complex financial products, that risk is always there.
And if one major player fails?
The knock-on effects can be huge because everyone's interconnected. It could trigger a wider collapse.
So the interview really hammers this point. Hold your own assets. Don't leave them in banks, brokerages, crypto exchanges.
Not even with middlemen you might trust. Their perspective is, in a real crisis, those institutions might not be able to give you back your assets.
It shows a deep distrust of the existing infrastructure.
A very strong belief in individual control over wealth, especially when things look uncertain. They even warn about storing physical metals overseas.
Because governments might seize them or block trade in a crisis.
That's the concern, yeah. Nationalization or severe restrictions.
Makes sense if you're anticipating that level of disruption. Okay, so from self-custody, they move to disintermediation, cutting out the middleman.
Right. And this brings in Veritasium.
Tell us about that. It involves someone named Reggie Middleton.
Yeah, he's described as the inventor of a patented technology for direct peer-to-peer value exchange. Basically, DeFi, decentralized finance.
And this patent was granted way back in 2014, before DeFi really took off.
Apparently so. Think about recreating lending, borrowing, trading, all that financial stuff, but without banks in the middle, using crypto.
That sounds revolutionary. And the interview suggests this patent has massive implications.
Huge. Potentially changing everything, stock markets, bonds, commodities, maybe even ending high-frequency trading.
Wow. That's a bold claim. Why would that be?
Well, the idea is this tech brings truth and honesty to markets they see as rigged or manipulated.
And that's why the established players would fight it.
That's the narrative presented, yes, that the banks and financial powers see it as a fundamental threat to their control.
Which leads to the story about the SEC going after Middleton and Veritasium.
Yeah, the interview mentions tokens being confiscated, negative labeling on CoinMarketCap, although they say that label was recently changed.
So they frame it as a fight, innovators versus the establishment trying to suppress change.
Pretty much.
Yeah.
A struggle over the future direction of finance.
Okay, now let's bring in the Webbit stuff and Clif High's predictions. Temporal markers, what's that about?
So Clif High uses this method, analyzing language online, to try and predict future trends and events. It's unconventional.
Definitely.
And the interview cites a prediction that governments would eventually embrace something like Veritasium to fix the broken system.
And the DeFi patent being granted is seen as the first temporal marker, like proof the prediction is on track.
That's how they interpret it, yeah. And they mention other potential markers, too.
Like the Litecoin-Bitcoin ratio?
Yeah.
And gold-silver.
Exactly. Let's start with Litecoin and Bitcoin.
Okay, what's the prediction there?
A rebalancing, maybe this spring. The idea is Litecoin being faster and cheaper for transactions.
Might become more popular for actual payments.
Potentially, yeah. Though they do acknowledge Bitcoin's taproot upgrade might counter that somewhat.
But they mention a possible temporary ratio, like 1:5 in value, Litecoin to Bitcoin.
During a phase where Litecoin's utility is really in demand, yes. It suggests a shift based on practical needs, especially if the old system falters.
Interesting. Okay, what about gold and silver?
Well, the focus is heavily on silver. They argue there's a growing deficit because industry uses so much of it: electronics, solar, space tech.
And at the same time, more people want silver coins.
Right. They acknowledge industrial demand might lag a bit short-term because of supply chain snags, but the overall trend is towards scarcity.
And the prediction is a big jump in demand for silver coins specifically.
Yeah, leading to this potentially dramatic outcome where silver could reach parity with gold.
Equal value.
Or even overshoot it, become more valuable, especially if gold mining ramps up, making gold less scarce relative to silver.
That would turn the traditional view completely upside down.
And they even throw in this really specific detail about silver isotopes 107 and 109.
Isotopes, like different types of silver atoms.
Exactly. Suggesting one might be better for industry, leaving the other potentially for coinage. It adds this layer of technical intrigue.
It certainly does. Silver potentially overtaking gold.
Wow. Okay, this leads into what they called the panic to own.
Yeah, this is the idea that as anxiety about the traditional system grows,
People rush to buy alternatives. Crypto, precious metals.
as a perceived safe haven. Exactly. And the speakers in the interview say they're already seeing this. More people asking questions, wanting to learn, wanting to buy in.
So they feel this panic to own phase might already be underway.
It fits the narrative of people seeking exits from the mainstream financial world when uncertainty rises. Okay, now we get into some pretty dramatic territory. The predictions of an impending collapse and the rise of human organic economy.
Right, this is where Clif High's timeline comes in again. Mentioning dates like December 9th as key. A crisis becoming visible around December 11th.
Peaking maybe December 19th through early January.
That's the period they highlight. And they link it to things we're seeing: bond issues, currency problems in places like Turkey, Venezuela, Peru.
The Evergrande fallout continuing.
Yeah, and even speculation that China might use the bond crisis as a diversion, possibly related to Taiwan. Geopolitics mixed in.
It's a complex web. They also had that interesting point about the Evergrande bondholders.
Right, maybe being hesitant to actually declare the default and force the markdown.
Because they don't want to admit their assets are worth zero, creating a fake front, a Potemkin village.
That's the theory, a facade of stability hiding the rot.
So the big prediction is a global fiat crash. Dollars, euros, etc.
Lasting maybe 3 weeks, but the worst hitting fast, like within 48 hours once it starts.
Like a tide going out, revealing everything underneath.
That's the analogy they use, yeah. The financial system tide receding over 3 weeks.
And Clif High apparently sees a zenith, a turning point, around the winter solstice in late December.
Within this collapse scenario, yes.
Yeah.
Seeing it as the breakdown of the whole petrodollar fiat currency system.
And central banks could fail very quickly, like within weeks of each other.
That's the prediction. And after that, this move towards a human organic economy, not centrally planned.
How would that work? Maybe governments issuing gold or silver-backed currency?
That's one possibility floated, moving away from fiat entirely. They bring up historical hyperinflation like Weimar Germany.
But noting it was actually quite short. Less than 4 months for the worst part.
Right, suggesting these extreme crises don't necessarily last for years and years. The core idea seems to be shedding the burden of the old imposed system.
Letting something else emerge.
Which brings back the good guys idea from the road to Ruda.
Ah, right. The theory that this collapse will actually reveal these hidden actors.
People working internationally who already have trust established, ready to help rebuild trade and the economy.
And they might set fair prices for gold and silver, maybe through international agreements.
That's part of the speculation within that framework, yes.
And a key point they stress. This time, no immediate bailout, no safety net.
Individuals need to be self-reliant, which ties into their recurring theme.
Freedom requires responsibility.
Exactly.
The interview also briefly touches on why this didn't happen sooner, why the delay if these changes in technologies like Veritasium are so beneficial.
The speculation seems to center on resistance from the established powers, regulatory actions, basically forces trying to maintain the status quo, even without a clear long-term plan of their own.
Just trying to keep the current game going.
Pretty much. Which then leads into a really thorny question. Wealth redistribution after a collapse like this.
And the potential role of Social Security.
Yeah, using the Social Security database because it lists so many participants in the old system as a basis for maybe reallocating wealth.
Possibly prioritizing those who paid in the most.
That's one idea explored, but they immediately raise counter-arguments too.
Like, is that fair? What about younger people? What about differing lifespans? It gets complicated fast.
Extremely complicated. It really makes you think about how a society would even begin to address wealth and fairness after such a massive disruption.
Okay, so let's try and summarize the key takeaways here. We've got Evergrande as a potential catalyst.
Global financial instability potentially reaching a critical point.
Theories about a paradigm shift, maybe driven by tech like Veritasium.
The idea of peer-to-peer value exchange taking over.
And these predictions of a relatively near-term rapid collapse and transformation.
It really paints a picture of deep interconnectedness, where things could change very quickly across the globe.
It definitely underscores the idea of needing to be prepared, stay informed, and just try to grasp the forces at play.
And maybe it leaves you, the listener, with a final thought. What would a truly human organic economy actually look like? If it's not centrally planned, what guides it?
And what's your role in that? If freedom means responsibility and self-reliance, what does that imply for each of us?
Perhaps exploring ideas like the road to Ruda or Clif High's work, even if just as thought experiments, might spark some further reflection.
Thanks for taking the deep dive with us. Until next time, keep exploring.